Gold.
Hmm.
Why is it at $4,200 an ounce? What's silver's? Is it at 60?
Yeah. Well, I mean, I think the thing about silver and gold is silver typically follows some increment of what gold does. So silver has done just that this year. However, it's done even better. Why? Because of the industrial use of silver and everything AI that's going on right now. So you've got this whole concern about, okay, is there going to be inflation because the Fed's probably going to have to cut interest rates again because of all the things that we talked about and all the debt that is piling up. We didn't even, we talked about the national deficit, but real estate debt over $1 trillion that needs to be financed next year. So there's a lot of worry out there right now. And I think when you have that type of worry, you'll have people talk about Bitcoin being a hedge, and maybe we'll talk about that. I think it's not. Gold over 5,000 years, especially over the last 100 years, has proven, especially during inflationary periods, to be a very good hedge. And so I think you've got gold doing what it typically does during this period of time of uncertainty. It's doing pretty well. And I think silver is just following.
Man, I started buying gold in 2020 because
Yep.
I started buying a lot of different things
Yeah,
in
yeah.
2020 that
Yeah.
toilet paper.
Yeah.
But
Clorox wipes.
I mean, I think when I started buying gold, it was $1,200 an ounce.
Yep.
5 years later, it's $4,200 an ounce.
No, it's done.
Silver was, I think, 22,
Yeah.
23 maybe an ounce.
Yep.
Now it's 60 something an ounce.
Yeah, gold is one of those assets. I think everyone should be putting together a diversified portfolio, right? You don't want all your eggs in one basket. That's pretty common saying, but it's true. The question is, how do you diversify those eggs? And so when you think about gold as an asset class, I think everybody should have between about 5 to 10% of their overall portfolio in gold. So if you got $100,000 total, 5 to 10,000 of that would be in gold. I prefer using actual gold bars, coins versus like the GLD ETF that you can access. Maybe that's second best. Or if you've only got a 401k and you have GLD in there, that might be the way. Same thing, SLV is an ETF. I'd rather hold the silver because it's just more of a hedge. The challenge is that it's a little bit harder to get in and out of gold and silver. There's very few places that do it. There are some good ones out there. But look, I think long-term it's a hedge. If you're so inclined to be able to time it a little bit around inflationary periods when you think those are going to be happening, it tends to do a little bit better versus deflationary periods. But arguably, with what we're getting into, which I think the Fed will have to cut interest rates a lot more aggressively than they're telegraphing, a lot more aggressively than even the market thinks, I think that is a really good backdrop for precious metals to continue to do well. So it should be part of every portfolio, in my opinion.
Why has it gone up so much? I mean, it didn't do this before, did it?
Yeah, I mean, there's been period. I mean, it's always held up well during uncertainty. 2008, 2009, during the dot-com crash, during COVID, gold has held up exceptionally well. And so that's the thing I love about gold too. Like I said, it's been around 5,000 years, but you just look at the last 100 years, there's a track record. Unlike cryptocurrency, like we've only got 15 years of crypto. When you think about data sets, and I'm very big on data, 15 years is nothing. You can't make any determination. But gold has been very, very reliable over that period of time. And I just think with tariffs, all the uncertainty that's going on, all the things that crypto was supposed to do and hold up well during, which it hasn't. I think 2025, pretty much everything's down, right? Bitcoin's down significantly during that period of time. Gold has done what it should be doing. And so I think of all the alternative asset classes to stocks and bonds and real estate, I do like precious metals. And I don't have enough. I wish I would have bought more.
I mean, should people be buying it now, or is it going to come back down? Or?
Look, I think, it's very hard to time any market. And so one of the things about investing in general, the shorter your time horizon is, the harder it is. Mm-hmm. The longer it is, the easier it is. Mm-hmm. Think about the S&P, the largest 500 companies. Over any 10-year period, it does well. Over a longer period of time, it's always done 10%, but it comes like this. If you needed to know what is the S&P going to do in the next 12 to 18 months, I have no idea. So if if what you're investing for, those needs need to be liquid in 12 to 18 months, I wouldn't touch the S&P 500. Longer period of time, 5, 10 years, absolutely. Same thing with gold. If you're trying to time it over the next night, if you need to take this money out of gold and buy a house in 12 months, I would say you don't touch it, especially after a big run. It should pull back. Trees don't grow to the sky. It should pull back. I wouldn't be going all in on it now. If you have no position, maybe buy a little bit right now. I would look for a little bit of a pullback, which I think could happen. But I think longer term, again, 5 to 10%. If you've got more than that, also, the thing about gold is it doesn't pay a dividend. The only way you make money on gold is you buy low, sell high. So for someone like yourself, if now you've seen that it was 10%, but it's become 30% of your portfolio, the corollary is it might be time to take a little bit off the table of that. But if you don't have any, it might be a time to start a small position and try to look for some pullbacks.
Okay. What about crypto? I mean, I've had a lot of crypto guys on here.
Yeah.
You despise crypto.
Despise is a relatively strong word, Sean.
Okay. You're not a fan of it.
I don't own any. I have owned.
None?
Zero now. I closed the last of my cryptocurrency out, which was not a lot, about 6 months ago. I sold all my Bitcoin a year ago.
The crypto bros are not going to be happy with you.
Anytime I told you before, if I talk about penny stocks that I don't like, or I talk about not liking crypto, like the cult comes after me. You don't know shit about crypto, or neither do you. So, and that's the one thing, look, about cryptocurrency, Sean, my view, only it is my view. What I believe is there is no way, and I've asked multiple people, in terms of the technology of it in blockchain, and even if you talk about really, really smart people and some of the vulnerabilities and potentially with blockchain and crypto, with supercomputing coming out that everyone's closing their eyes to, but just say this, the technology and all those things are solid. As a substitute, which still people say it could be a substitute to the dollar, never going to happen. There's not enough liquidity. It's way too volatile for that to happen. There's still a lot of problems with nefarious types of things being done through cryptocurrency. So governments are finding it very hard to regulate. How do you value cryptocurrency? The truth is it's only worth what someone's willing to pay for it. You can say the same thing for the dollar, kind of true. But if you look at the usage of the dollar, if you look at the reserve currency status of the dollar, if you look at trading in currencies, the dollar has actually increased over the last 10 years. So as bad as we talk about the dollar, it still continues to be the gold standard, if you will. Cryptocurrency, again, the big problem I have with it is how do you value it? What's the intrinsic value? I can do that with gold, easier even with silver because there's a use case for it. There's no utility for cryptocurrency. So now, can that change in the future? Can this be adopted by more people? Potentially. But in terms of, again, who I work with myself, we build multi-asset class portfolios, gold and real estate and private equity and stocks and all those things. And so what would be the reason to put cryptocurrency in there? Now, if you maybe had a small idiot bet, you're like, I just don't want to be proven wrong. I want to have 2 to 3%. And this is why I bought it before, right? 2 to 3%. Yeah, maybe. But the truth is, like, the people that got in 2008, 2009, like that run, like that's done. That's not going to happen, right? And so everyone's saying, oh, you still got to be in crypto because Bitcoin might go to 150,000. All right. So you don't know how to value this. There's a tremendous amount of risk in it. I can't touch it. I can't feel it. It might go to 150, but I've got multiple AI small cap stocks that are up over 300% this year, while you sat in an asset class that lost 18%. So like, I don't see, it's like not a great speculation. It hasn't worked out super well. I can't really use it. And then the one thing I just want to talk about is I think, the crypto bros or whatever you want to call them, they always come back all of a sudden. The guys who are investing in this stuff because they hate the industry and they don't want bank, they're now using Bank of America as offering it to their clients, Rob. Are you smarter than Bank of America? Yeah, I am. You remember Bank of America in 2008 was essentially bankrupt because they also backed subprime mortgage and me and you had to bail them out with our tax dollars. Now they're all of a sudden the authority on risk management and how to allocate assets. And yeah, but what about them? The biggest ETF company in the world, BlackRock, now offers Bitcoin. Dude, they would offer a turd if they could put it in an ETF and put a fee around it. And that's what they're doing. They're collecting a fee and it's very, very profitable. And the biggest problem I have with cryptocurrency is that when these big organizations validate it and they make it available to more people to put in portfolios and other things, it then could create a systemic risk, just like subprime housing did. And so people who didn't get in 2008 and make all this money are just sitting in it now and bought the Bitcoin ETF and are actually negative. Now, as this gets infiltrated and over-levered inside of other organizations, does it become a systemic risk where that's the next bailout? And now we have to worry about cryptocurrency because there's some systemic risk to it. Again, I'm not in it, but am I going to have to pay the tax bill for it at some point if it continues to spread? Probably. That's just kind of the path that we've been on with all these things.
Jeez. Can't wait to see the comments with this one.
I'm an idiot, dummy, don't know anything. I'm missing out. Boomer.
Are you tracking BRICS at all?
Brazil, Russia, India, China, the currencies that are going on there. Yeah, I do. And it kind of, again, it goes back to if you look at the dollar, its reserve status, how much it's traded. Yes, some of those currencies have gone up. They have greater depreciation. The one that's done the worst is the euro. Like money's just flowing out of the euro. And I think we kind of all know why there. But
why?
Because of socialism, because of unrest that's going on there. And like the government's continually, like socialism destroys countries. It really does. And that's the reason, right? When you look at voters, and I'm half Cuban, and you look at Miami, right? These are immigrants that came here. Most of them vote Republican. Why? Because they know the problems with socialism, right? They know what it does to countries. You look at Argentina, you look at going back to places like Russia, 1998, going back to systemic risks, and smart people knowing what to do. Nobel Prize laureate started a hedge fund of trading currencies in 1998 called Long-Term Capital Management. They didn't think Russia's currency can go to zero. When it did, collapsed. The rich people, yeah, maybe they lost some money, but then our government again had to come in, backstop banks that were doing this, and taxpayers once again had to be able to do it. So, what I would say is the dollar as of right now, from what I could see, is still a very safe place to be. I just talked about all the deficit and the long-term sustainability and all these things, and I think it is a house of cards. But the big question that you and I always have to answer, and especially because I've been on TV 17, 18 years. I have to go out there and make an opinion. When I made those opinions, though, my clients are like, is that consistent with the things that you're doing for us? So there was always hundreds of millions of dollars that had to be accessed and put to work through my opinions. I don't have the luxury of 300-year bets because my clients don't live to 300. Right. And so if I sit here and say Bitcoin is great, guys, and in the end of 2024, when I was on your show a year ago and say, hey, go all into Bitcoin, and you just lost 18% this year, why small cap stocks skyrocketed, nuclear stock skyrocketed, some of these, we talked about some of these psychedelic stocks If we missed out on all of that because I was so in on this one strategy, I would have gotten fired. Right. And so what we have to do is be aware of the risks. And I started as a risk analyst, so I always look at what could go wrong first. Right. We have to be aware of the risk with BRICS and all these different things. But the question is, in putting our money to work, are we willing to take a bet on that collapsing and those things? And I would say, as of right now, no, that's not where I want to put my money. I came in the market as a professional in 1998. And I was hearing the dollar's going to collapse, all valid arguments, right? Why this guy was pretty much 100% in T-bills and like he did have some gold, but very little in the stock market, very little in private equity. And what happened during that period of time? S&P hit. The thing about the S&P, which is, I say S&P, it's the U.S. It's the largest barometer of the U.S. economy, the largest 500 companies here. 100% of the time, every time there's been a dip, it's been a buying opportunity. Not 99, not 98, for 100 years, every time it's been a dip, it's been a buying opportunity. So if you just bought every time it declined, you're going to do well. So when you look at that, that's consistent. Gold, consistent over time. But when I look at something, and I've learned over 28 years of doing this, my opinion doesn't mean shit. All that matters is what is in front of us, what are the risks, what are the opportunities, and what does the market as a whole believe? And that was why am I out of crypto? Well, I understood why it went to where it was. I understand why was it there. But then what I also talked to you about is last year, I said, okay, if you're going to be in crypto, have a small amount. Why? because I believe this administration is so crypto friendly, and the narrative that they've been putting around crypto and the investments that they have in it, if anybody can get this to run and get enthusiasm around it, and that's what you need from an asset class is enthusiasm, it's going to be this. So then I looked at them like, if they can't get it to go, then what's the next? I'm always looking at what's the catalyst. And when you start running out of catalyst, then you start thinking of, am I going to just sit in something with the hope and pray strategy? Or am I going to go to something that has intrinsic value, it's discounted, and there's going to be some catalyst where at least I'm putting myself on that side of the table? And that's kind of why I sold my crypto.
No matter where you're watching Sean Ryan Show from, if you get anything out of this, please like, comment, subscribe, and most importantly, share this everywhere you possibly can. And if you're feeling extra generous, please leave us a review on Apple and Spotify podcasts.